Such a pleasure to be joining you on this all-new edition of the India Development Debate right here on ET Now. I'm Supriya Shrinate, and we've got to address the story that has hogged limelight all day today, the standoff between the government and the RBI, which seems to be reaching a flashpoint. The centre may have invoked a rarely used clause under the RBI Act, at least a part of it, to rein in the central bank on critical issues like liquidity in the banking sector, reserves and operational autonomy. Interestingly, the move comes within days after RBI Deputy Governor Viral Acharya launched an all-out attack on the centre for meddling in its affairs. Under Section 7 of the RBI Act, which is really two stages, one consultation and one directions, the government is empowered to hold discussions and give directions to the central bank on broad economic policies. Clearly, the Modi government has sent out signals that RBI better take its directions seriously and not walk alone. The Finance Ministry has now clarified that the onus on both the RBI and the government is to take care of public interest and requirements of an ever-evolving economy. On RBI's autonomy, the government says that it has to be within the legal framework. That may be the case, but the never-before offensive against the central bank has created ripples in the markets and amongst the economist community, who feel that if not doused in time, the fire could cause huge collateral damage. The biggest flare-up in the RBI versus government standoff in history is the topic of discussion and debate right here on the India Development Debate this evening. And I've got a stellar panel joining me right here on ET Now. We're keeping it to just 4 commentators to maximize their time and their perspective on air. I've been joined by Dr. Indira Rajaraman, former member of the 13th Finance Commission of India, Dr. Arvind Virmani, President Forum for Strategic Initiative and President Chintan, R. Jagannathan, Editorial Director, Swarajya Magazine, and of course Maithili Bhusumat, Consulting Editor, ET Now. So thank you very, very much, each one of you, for joining us. And Dr. Rajaraman, if I may really begin with you, and today the trigger for this debate and the trigger for the headlines and the trigger for the speculation of RBI Governor's exit, and I'm going to take it point by point, is really invoking of Section 7 and partial invoking of Section 7 as far as consultation is concerned. 3 letters of consultation sent under Section 7 to the RBI. In some sense, this is a landmark day. This is a red letter day, if I may. This has never been done before. There are people out there who believe this is a sign of the government's loss of confidence, loss of faith in the RBI. There are many who also believe this is a sign of a government that wants to roughshod over India's central bank. How are you going to read it?
Let me begin by reiterating that in all countries, the sovereign remains supreme. That has to be so in the central bank legislation of all countries. There is always some such provision. The fact that this provision has never been invoked before is a good thing. It means that the government of the day and the central bank governor of the day were enough on the same page that they did not have to invoke that provision. However, if the sovereign, in its judgment, were to feel that consultation is called for, and if that provision exists under the law, the government cannot be faulted for invoking it. So I don't think that too much should be made of the fact that this section was invoked having never been invoked before. The need of the hour is in fact dire. We have a financial sector which has been hit with scam after scam. We've had the ILFS multiple defaults. And the present problem with non-banking finance companies is directly a result of the ILFS defaults. So this is a serious situation. The government felt in need of consultations and invoked that section. I don't think any line has been crossed so far.
Line has been crossed so far, but there are many who believe there is no coming back from this point of no return. Let me take this across to Dr. Virmani. And Dr. Virmani, invoking Section 7 or a part of it, I think Dr. Rajaraman puts it in a good way, that the sovereign, which is an elected representative, perhaps is supreme across the world, and this should be no exception in India as well. But there are many who believe that with both sides refusing to budge from their stance, the government on those 3 contentious issues, telling the RBI to do what they believe is the right thing to, and the central bank refusing to do so, are we heading for a climax and a point of no return? And is it a question of when and not are we going to see the eventual exit at the RBI happen? I mean, I woke up to speculation that Dr. Patel was going to quit. Thankfully, that hasn't happened now. But just the point of no return. Have the RBI and the governor, and the Finance Ministry in some sense got into a duel where there is no point of returning from there now?
Let me give my general observation, given that I have worked with both the government and the RBI for 20 years in the past, before I answer specific questions. And my feeling is that over the last several years, there is fault on both sides in the following sense. On the RBI side, I think they have often taken a very ideological position rather than a practical position. Practical doesn't mean, by the way, giving up principles which are accepted by 50% of 100% of the experts. But where it is 50-50, you have to be practical. You can't have an ideological position that just because I think this is right, everybody must think this is right. And on the other side, I think the government has been a little too political. So in that sense, both of them, in my view, have been moved away from what I have seen as a successful management of the RBI government relationships, which is, okay, you have some position, but then focus on the technical and professional aspects, keeping in mind both the ideological and political positions. And my experience is generally that if you focus on each person's technical arguments, there is generally a way forward. There is usually a middle path, which, as I insist again, middle path doesn't mean that if there are good, sound professional principles, one has to abandon them. But there is always a way to have a way forward. In fact, that has applied in my approach to general reforms also, not just in monetary field, that one does not have to give up one's objectives of reaching a certain what one feels is a sound place, but there is always scope for transition and adjustments on the way there. So that I feel this lack of focus on the professional technical aspects and this adaptability is what I feel in a broad sense has been lacking in the last few years.
Okay, okay. Just hold that thought right now, because I'm going to take this across to both Jaggi and Maithili. And you know, when all of this was happening, came in a response from the government, and the response from the government seemed to be very conciliatory in tone, if I may. And if I may just quote some parts of what we actually saw there, it was almost as if the government was extending an olive branch and trying to douse the fire. It very categorically said that the autonomy of the central bank within the framework of the RBI Act is an essential and accepted governance requirement. Governments in India have nurtured and actually respected this. Both the government and the central bank in the functioning have to be guided by public interest and the requirements of Indian economy. Maithili, while I understand that as a sovereign government, the government is well within its rights to do what it perhaps has done, even though it wants to still call it consultation, my question to you really is that who decides what is in public interest as far as a central bank is concerned? It has a different mandate. It has a, you know, price management is what RBI needs to do. The government has a very different mandate. And like Viral Acharya pointed out, maybe in not such great terms, but there is a T20 and a test match difference between the two.
Well, Supriya, in a democracy, I think public interest is always the prerogative of the sovereign. Indira put it very well, and I would agree entirely with her, and this has been my position in the past as well, that the RBI in fact has full autonomy as far as monetary policy formulation is concerned. And in fact, this government has given the RBI full autonomy, and we now have an MPC, unlike in the past where the government, in fact under the previous finance minister, Mr. Chidambaram, he was very vocal about getting interest rates down, whereas this finance minister has been far more restrained. So the RBI has been given full autonomy in monetary policy formulation. As far as other aspects are concerned, let's be very clear that ultimately the banking sector has to be bailed out. It has to be bailed out with taxpayer money. Now it is only the sovereign, the government, who has the right to use taxpayer money. So I think this is a very, you have to tread a very careful line on this, because in a democracy ultimately it is a sovereign, and I think today's statement from the government is a very mature statement. Hopefully it will de-escalate what was fast becoming a completely avoidable kind of crisis. In fact, Mr. Jaitley's statement on Tuesday was not in the best of taste, but perhaps it was responding to Viral Acharya, and things were
fast going out of control. So given that, I think today's statement was very mature, and hopefully it will de-escalate a crisis and we will not have a repeat of this. One last point about your question about Section 7. The fact is, it has never been invoked in the past, but nor has the Deputy Governor, if I may say so, ever spoken like this in public. So there have been unwarranted precedents created on both sides, and hopefully it will not be repeated.
We're seeing unprecedented dialogue coming from the Deputy Governor, and I think the Governor did not speak because he doesn't want to get in open confrontation with the government, and there should be plausible deniability on that front. And I think from the government's point of view, yes, Section 7 has never been resorted to. But Jaggi, the water has been fairly muddied. There is no denying that. You speak to both sides, you get a sense of how upset they are with each other, and it's not as if it's just the Finance Ministry that's upset. It's all the way up to the PMO. I'm given to understand that the Governor and the Prime Minister actually had a meeting in which there was a verbal exchange of ideas, and it was said that please do this, and the Governor said he would. He went back, he didn't do it, which is why Section 7 had to be invoked. That's what I've been given to understand by sources. But considering the fact that the waters have been muddied, it has vitiated the atmosphere. Do you believe, under this cloud of suspicion that we are now seeing and the kind of headlines it created today, will it now be possible to converge on some of the issues that are actually the big bones of contention? And we will take this one by one, whether it's reserves, whether it's NBFC liquidity, whether it is PCA norm relaxation for SME lending. Do you believe there could now be convergence on some of these contentious issues at all?
I think if both the government and the RBI stop making their points in public and discuss their differences in private, I'm sure most of these issues can actually find a compromise or some kind of a solution. I mean, I agree with all the three previous speakers that look, it is the government that is accountable to the people, and if the government cannot take the final call on certain decisions, you can't keep saying independence of the RBI and things like that. And also, let's not forget, our RBI has a very nebulous kind of mandate. See, if you take the US government, employment is a very significant part of the US Fed's mandate. Here we don't have anything, we only have an inflation target. So it's a very narrow mandate and things like that. Then there is banking supervision. So the point is, if the government feels that you need to do something about growth and employment, I think it has a right to take certain calls. If the financial sector is in danger of caving in because of the NBFC crisis and the unresolved bank debts problem, and if the government's finances are stretched in this particular year, and if the Reserve Bank says that I will not accommodate you, I am going to stand rigid on what I am going to do, it's wrong. I mean, I think you've got to do. In any case, if tomorrow, let's say, in the worst case scenario, the RBI itself has a capital problem, who do you think is going to bail it out? It's the government. So you have to listen there, and you cannot just keep saying that I am going to do what I think is right. And I think there is an additional problem here. I think for the last two governors have been unnecessarily egged on by the political opposition, and both Mr. Rajan and the current dispensation are needlessly getting into the political domain by playing to the political gallery. I think that is where the problem comes. Otherwise, they could actually resolve their differences quietly behind closed doors.
But I guess you could have said that about Dr. Rajan, because he made these public speeches. I'm not so sure Urjit Patel even talks enough to be embroiled in any kind of political controversy. I mean, I've struggled to get an interview of him in the last 2 years that he's been in office to no avail, and he's the only RBI governor that I haven't interviewed in office. But Professor Rajan, I'll come to you, and I think we need to get down to the substantive issues, and I'm being given to understand that the biggest bone of contention, forget about NBFC liquidity and all that, in just a bit we'll talk, is really the reserves. It's no longer special dividend and extra money and all of that. I'm given to understand that the government wants the RBI to transfer reserves to the treasury. Now the reality is it's about 3 lakh crore worth of reserves. Unless, and this is an election year, and I think anybody will understand that this is going to be used for, election euphoria, so to say. This will not be money that will be put to productive use. The government may be well too desperate to show some kind of a windfall gain in the last year. Is the RBI unjustified in saying a no to that money? Because this money will further lead to further complications. What is this money going to be used in the economy for? This will stoke inflation, bond deals and all of that, management of which is the RBI's domain.
When it comes to the RBI's reserves, I think it's useful to make a distinction between the stock of reserves as it stands at the moment and the flow addition to those reserves every year, which corresponds to what companies call retained profits. That's profits not going to the owner, which in this case is the government. So in asking that the RBI not add further to its reserves and make over its entire profit to the government as dividend for the year, I think the government is within its rights to do so if they believe that the stock of reserves as it stands so far is sufficient. But then again, when you're talking about sufficiency of reserves, this is a technical issue. And it is something that has been addressed repeatedly within the RBI by committees and also by internal discussion among the senior management. So I would imagine that on a technical issue like this, the RBI should be more than willing to engage with the government to present the technicalities, the reasons why they believe that the stock of reserves as it presently stands is indeed needed for the RBI to have credibility, to handle various kinds of volatility that it will be asked to face. Let us remember that at the end of the day, the RBI is not just there to ensure that inflation is between 2 and 6%. The RBI is there to ensure financial stability, and if the RBI believes that a certain percentage of reserves, X%, is necessary for it to guarantee financial stability, then they are home free. And if they can present their argument, their technical argument, they can win the day. So I don't know why the RBI is holding back from that discussion and simply saying no.
Or I don't know if the government of the day is not buying that decision. We don't know those. We don't know that channel of communication, and so I think it's an important point that you put on the table, that it's a very, very strong technical argument that the RBI needs to make and should be making. If it is making and the government of the day is not buying it, then we've got to do some serious rethinking on how these, how it's expected to part with its reserves. But Dr. Virmani, obviously the real war is on 3 lakh crore worth of reserves. Israel had done it and paid a price for this. I don't think we can look into this policy adventurism of sorts. But could we perhaps look into a more substantive formula structure to deal with these reserves? This can't be done overnight. I mean, one of the solutions that I think were put forward on the table by Raghuram Rajan, if I'm not wrong, or Subbarao before him, pardon me for my ignorance here, was that you treat RBI equity as asset, put it against your debt, and that's going to, lessen your debt burden. Why can't something more substantive, more formalized, more structural be done with it?
Right. So I agree with Indra on this separating out the flow problem, or what the dividend policy should be, from the stock. Now, the solution, I don't know whether either former governor gave this solution, but I gave this in a discussion yesterday, that most economists agree that converting stocks of assets into a dividend would be a disaster. That is not the way to run either fiscal or monetary policy. But there is a solution which is precisely what you are saying, is what I also suggested yesterday, is that you can do a cleaning up of the balance sheet of the RBI, which also benefits the government. And that is because people have forgotten, till about 10 or 15 years ago, the RBI used to finance the budget of the government of India, and then we had a law stopping that practice. Now, in principle, it would be perfectly justified, and I think a good cleaning up of the balance sheet of the RBI to offset some or part, or even all of its reserves, not all, sorry, it shouldn't be all, against this debt which is the government owes it, because there is a logic to it. There is many countries have a all of government approach, in which it should anyway have been offset as we went along. So there is nothing wrong in doing it. It would be beneficial, in my view. It would be a positive in the market, because it would clean up both the government's balance sheet, and it would clean up the RBI's balance sheet. So I would certainly support that solution. And I would say that that's a good compromise. I don't know why nobody has suggested it or considered it or discussed it.
Okay. But Maithili, if I may come to you, and I know you are of the view that this is not as if this money belongs to the RBI, and why can it not be used? My issue with this is that everybody, and a lot of people who point out to the solution, also in the same breath says, you know what, US US Fed did it and things like that. But the US government had a rating of AAA+. We don't have that rating. The rating of our government is a lot lower. Can we take that risk is really the big question.
Well, Supriya, on this again I find myself in complete agreement with Indira, because one does need to distinguish between the stock and the flow, and the RBI's balance sheet in fact is so exceedingly complex, because there is an issue department balance sheet, there is a banking department balance sheet, that even within the Reserve Bank of India I don't think there are maybe more than 20-30 people who completely understand the RBI balance sheet. And many countries in fact at the seigniorage, that is the revenue flow from the difference between the cost of the printing of the notes and the value, the face value of the notes, it gets entirely transferred to the government of the day. So I think what is most important is that we have clear rules, and there is some kind of discussion between the government and the RBI behind closed doors, because it's a highly technical discussion on what is the kind of rules that you have, how much of reserves should the RBI have, both in terms of foreign exchange depreciation reserve, contingency reserves, and then we have clear rules so you don't have these ups and downs in the transfer of dividend to the government, because at the end of the day the government also needs to have some certainty about what is the kind of contingency reserves the RBI needs to keep. Most important of all, I think it's important for the RBI to realize that while balance sheet strength is very important for the central bank, it makes no sense to have a strong central bank balance sheet in a country whose balance sheet is not strong at all. So you need to have preserved both the strength of the country's balance sheet, which is the fisc, and you need to have a strong central bank balance sheet. And this is best resolved through dialogue, not through confrontation.
No, I agree with you there, but what I don't agree with a lot of the points that have been made on not this show but on this channel really is, why can this money not be used to mask the fiscal deficit? It should not be used. I mean, if the fiscal deficit is wide, why should you resort to reserves to bridge your fiscal deficit? That's my limited point. But I think let's move the focus away from. So reserves was one bone of contention, apparently, on which letters of consultation has been issued. The other bone of contention is really liquidity in NBFC, and that seems to be gathering so much space and making so many headlines, especially after apparently the RBI board had a bit of a run-in with the governor and the deputy governors on this. And Jaggi, to you then, isn't it a judgment call, a pure judgment call that the RBI should be making between pure liquidity on one hand and insolvency on the other? If there are NBFCs that are going to fail, so be it. Let's live with the system like that. Let's have a more explicit bailout by the government instead of flushing the system with liquidity, because it may have very dire consequences going ahead.
See, there are two issues here. One is the Reserve Bank has typically been more favorable to helping banks rather than non-banks, especially in the past. In fact, all its policies are tilted towards helping banks and not non-banks. Now, in the NBFC crisis, if the RBI feels that it is not a liquidity crisis and that it's a minor one, then all it needs to do is convince the government about that. But if there is a major NBFC crisis going to come upon us, and I think I have read a report which says that some 50,000 crores of commercial paper are due to be extinguished this next week or so, and if there is one major default, you're going to have another systemic panic. I mean, if the RBI is not going to stop this, saying that NBFCs are not my big concern, then I think the RBI is doing wrong. So if it can use its balance sheet to make sure that the NBFC assets are actually stabilized, there is nothing wrong in doing a mini QE for an NBFC, just like you would do for the larger economy in case it's in trouble. You don't have to hand over one single rupee to the government if it is going to go towards subsidies of some non-merit subsidies. But surely saving the financial system is the RBI's core job. Why can't it do so? And if some of the reserves and its balance sheet can be used to help either banks or NBFCs, so be it. What's wrong? I mean, we are not saying that you hand over the money so that they can give some free rice or free smartphones to the population. We are not talking about that. We are talking about save your own financial system. That is your prime responsibility. So if your reserves can be used, if your balance sheet can be leveraged for that, do it.
Right. So I'm presuming you are a minority in this panel that believes that money should not be handed over to the government, at least as far as free rice and farm loan waivers are concerned. But Dr. Rajaraman, to take that point forward on NBFCs, is it worth taking a risk and letting some big NBFCs fail in the system than flushing the system with liquidity? Because the RBI has all along maintained that there is enough and more liquidity in the system. The tug of war is really as far as a special window for NBFCs is concerned, and on that count there seems to be a disjointed effort by the RBI on one hand, its new board members on the other, and of course the finance ministry and the government in a completely pole position.
While the RBI might maintain that, correctly perhaps, that there is enough liquidity in the system, the problem is that NBFCs are not able to access that liquidity. And this, in turn, is a contagion outcome of the ILFS multiple defaults. It's not as though the NBFCs were not managing their finances well. As far as I know, their indicators were doing pretty well. But it is just that they are afraid that when loans that they have taken fall due, they will not be able to access enough liquidity to service those payments. So this is a very special situation. It's a contagion outcome afflicting a section of the financial sector which was doing quite well, actually. And initially, the RBI did help NBFCs by opening up a liquidity window from banks to NBFCs. The problem was that banks, instead of lending to NBFCs, started lending to the borrowers from NBFCs, taking up the projects that had actually borrowed from NBFCs. And the reason in turn for that was because NBFCs in general do much better due diligence than banks do. They are closer to their borrowers. They know exactly what is going on. So it was easy for banks to take advantage of this opportunity to move around behind the NBFCs, as it were, and pick away their cherished borrowers. That will indirectly help NBFCs somewhat. It won't hurt them all that much, but they still do need liquidity to meet these huge liquidity claims that are going to press upon them within the next 6 months. And I think the RBI should take cognizance of that. I think they should open a special liquidity window for NBFCs.
Where the Finance Ministry's statement, and the Finance Minister has very categorically referred to as an evolving needs of an economy, and institutions need to evolve with that. And I think that's putting it rather beautifully. But let me just move across to the other bone of contention, and I'm going to take a quick breather after this. The other bone of contention, of course, is PCA norms. And Maithili, I know you have a very strong view on this, and before I go across to Dr. Arvind Virmani, and I want both your views on this actually. Maithili, you know, as far as PCA norms are concerned, and one such letter that was sent was also on PCA norms need to be relaxed for banks that need to lend to MSMEs. And I think this was a big bone of contention even in its board meeting with Mr. S. Gurumurthy, I think, taking up that issue is what informed sources are telling us. But the question really is that the same RBI, which is now being blamed for turning away, looking the other way when NPAs were in the making in the previous government, is being asked to look away, or is being asked to be party to the norms that it has put in place. I mean, these 11 banks that are in PCA are reluctant to lend because this is obviously risky lending. Why do you want them to do more? Because, you know, are we stoking yet another NPA creation? And in that sense, isn't there double speak? On one part, the RBI is being blamed to look the other way, and on the other, the RBI is now being blamed, is being asked to relax PCA norms when ideally it shouldn't.
On this, the argument was slightly more nuanced, Supriya, from my side, because here the fact is that in India, the PCA norms, the kind of capital adequacy norms, the provisioning norms that we have in the country are Basel Plus. That means we are wanting higher standards from our banks, higher than what the international standards are under Basel, in a situation where our banks are completely owned by the sovereign, in the sense majority owned by the sovereign, and there is really no kind of risk of the kind that Basel really envisages. So when you have such a high statutory liquidity ratio, for instance, then to ask for a liquidity coverage ratio or a stable funding ratio, these are slightly technical terms you will have to pardon my using. Basically the point that we have is that in India, RBI is asking for higher standards than are expressed internationally, and this I think is where the mistake is being made, because ultimately we do need to create jobs, and the government, as responsible for the, as I said, for the welfare of the people at large, will have to be concerned that if bank lending to the SMEs comes down, then we will be in trouble. Take for instance a very small example of the power sector. The Allahabad High Court had in fact asked for the setting up of a special committee having representatives from government, from banks, from the power sector and the Reserve Bank of India to sit together and try and solve the issue of stressed power assets, because ultimately, let's accept, the country does need power. Today we may not need it, but 5 years down the line, 2 years down the line, we will need more power. The RBI has refused to send a representative to any of the meetings held so far. Now this kind of behavior doesn't really help anybody. I think once again the RBI and the government must sit together and find out what is in the best interest of the country. And do we need stricter norms than what are laid down internationally, even for developed countries? Countries like Italy in fact have completely looser norms. So why should we have Basel Plus? I think these are issues which the government and the RBI once again need to address through dialogue.
No, I agree with you on the dialogue part of it. I don't know if some people will turn around and say that it is these stringent norms and perhaps higher than global standards that have held us you know, in good stead as far as the global storms are concerned. But I get your nuanced answer here. Dr. Virwani, do you want to add to this? And can you actually fault the government of the day that wants to encourage credit offtake and credit lending to SMEs, which find themselves, you know, stocked in a corner, which find themselves in a credit crunch of sorts? I mean, PCA norms or prompt corrective action norms, like Maithili points out there, are very stringent, and you know, we are trying to meet Basel by being even more stringent than the Basel norms require us to be.
Right. So some of these things are related, but you know, we discuss them separately. But very quickly, let me go through it. You know, given that the MPC has been set up for inflation aspects, the two major jobs that the RBI has is financial stability, which became the most important thing after the global financial crisis, and we have methods of dealing with it. So as Indra said, saving the financial system, keeping it stable and so on is very important, and we learned from the global financial crisis that liquidity is critical. And as you mentioned, the ILFS, or Indra mentioned, and you have also, that ILFS crisis, the contagion issues and getting into the NBFCs, so the liquidity issue has to be solved. As I think Jaggu also said, you know, there's no doubt about it. That is the responsibility of the RBI is the most important, to make sure that there is no collapse of the financial system. Now, I'm not saying collapse is imminent, but that is the job of RBI, and I think it should be able to convince the government that it's doing whatever is needed for that purpose. Okay, that's one aspect. The second, you said, the third one is the regulatory system, where the PCA comes in. Now, my understanding is slightly different. It is that out of 3 norms which the RBI has set up, 2 are agreed, and government and RBI agree these are international norms. The third one is what the government is objecting to. Now, when I look at this issue, what I find is that, let us say the government is correct, but within the RBI also, in one of those norms, we have a 15% requirement, whereas the world has 30% or 50, I don't remember the exact number. So here a compromise is possible. You know, both are agreeing that the 2 norms are correct and international, but within those norms we are kind of loser compared to the global norm. So again, in my view, if you get down into a technical discussion, have technical people, I am sure this issue is resolvable. And again, I'm sorry to repeat my point, I think people are taking it too much as a conflict situation. This issue, in my view, is resolvable. And there are 2 aspects to it. We all want the whole system of banks to be stronger, let's say 5 years from now or 3 years, but there's always a transition period, and in a transition you have to make adjustments, you have to make compromises. So as long as everybody is agreed and moves towards that goal, I think there's nothing wrong with compromise in the transition.
I think the biggest takeaway is that most of these issues are resolvable if the 2 sides are willing to sit across the table. What's going to get them to sit across the 2 sides of the table is really the big question, is it not? But let's talk about one such bony issue, and that happens to be the boat constitution. And Professor Rajaman, if I may come to you, there is this sense that one gets when you speak to both sides on and off the record, that the big bone of contention or the big standoff is really not so much between the government and the RBI so openly, as it is within the RBI board, we're given to understand that the RBI wasn't particularly happy with Nachiket More being asked to leave. They are perhaps not very happy with a very combative Mr. S. Gurumurthy there. Do you believe there is this, the tension between the newly appointed board members versus the whole-time directors? Could that have sparked a lot of tension? Because I'm given to understand, and by various sources and those involved in the board themselves, that there is a lot of the trigger for tension was the last board meeting, which was inconclusive, and another one has been called on the 19th of November.
On Nachiket More's departure, the government did not do things quite right, according to me, because he had been appointed a year previously for a full 4-year term. At the time of reappointment, it was a second term for him. At the time of reappointment, if they had no objections to his being the head of the Gates Foundation in India, why that should have become an issue a year later became a bit of a puzzle. So that was procedurally incorrect to remove a board member like that. That said, having happened as it did, at all times it is the task of the senior management, including the governor of the RBI, to get their points across to the board at the board meeting. And unless particular members of the board are very intransigent, there should in principle be a meeting of minds, because all present at the table desire the well-being or the institutional well-being of the RBI and financial stability in the country. If the last board meeting was inconclusive, I'm happy to know that a further extension board meeting has been convened, and hopefully there will be reasoned discussion and a meeting of minds at the end of that continuation meeting.
You also read this whole boat controversy, because you sample social media and you sample a lot of the opinion makers in and around, with ears very close to the ground, both in North Block and RBI, and they tell you that the bone of contention is not so much Mr. Jaitley versus Dr. Patel, it's really the new Mr. Gurumurthy in the RBI board and the board itself, and there seems to be a lot of tension that's brewing in the board.
I certainly think that the way they are communicating with each other, whether the new members who have very strong views on small sector financing and other things, where, I mean, the whole Mudra thing was started precisely because this government felt that you needed to do that. So if the way they are communicating within the RBI board has become more abrasive and more polarizing, then I think the RBI board has a problem. I think you need a far more simpler and straightforward communication system. My guess is that it is more a clash of personalities and the way they are communicating, rather than fundamental disagreements over what needs to be done. I don't think even the RBI would have any problem about the small sector or the medium sector getting more finance, because after all, after GST, these are the sections that actually need support, because the big manufacturing and services sectors can easily manage GST, but these are the ones that are left out. They need to be propped up with financing and other things. So I think the focus needs to be there, and that's where real lending can grow. So my guess is there is more a difference in terms of personality clashes and other things, rather than real disagreement over a policy issue.
Fair point indeed. So this is not such an intellectual disagreement on policy, this is more of a personality ego clash. But Maitri, what many people wonder, including myself, is that the same RBI that was rather pliable, that did not really stand up to pressure during demonetization. I remember, I know this was an executive decision, the RBI had a very limited role, but this was the monetary authority. They could have voiced their concerns, they did not, they took the fall for it. What has suddenly transpired in this period that Governor Patel is actually willing to stand up to the government and, put his dissent, put his disagreement on record in no uncertain terms?
Well, to some extent, I think it perhaps is the logic of attack being the best form of defense, because the RBI has been on the back foot, because it has been found wanting, particularly as far as supervision of both private sector banks, public sector banks, as also NBFCs is concerned. So the RBI has a great deal to answer for. So I think it's perhaps partly going on the offensive because of that, because it wants to deflect criticism from itself. And yes, there have been genuine differences as well. So I think it's a combination of factors, and the inability to kind of see eye to eye and resolve things amicably. Again, as Jackie talked about, personality clashes within the board. I think this is also an issue of personalities. I think ultimately the finance minister and the Reserve Bank of India governor, boils down ultimately to personalities, a willingness and ability to see each other's point of view, and if they disagree, agree to disagree and accept that while the RBI is independent, its independence is circumscribed by what the government of the day allows it under law. So it's important to again repeat what Mark Carney said. It's important to not to confuse independence with omnipotence, and that I think is where the RBI is being, I think, a little falling back on that, I think, Supriya.
Okay, I think while the Official Secrets Act gets quoted to us very often by the government and by the RBI, and the government in no uncertain terms today did say that there are many issues that evolve during discussions on decision making, but those never get reported by the government. Only the final decision is conveyed. They're almost telling, at least to the press release, I think the government was almost putting out there that we don't release the sensitive information and what happens between the invoking of Section 7 and all that. It's the RBI that does so. Dr. Vermani, why do you believe the RBI is talking and communicating like that? I mean, this is the fourth such speech that has been made either by the Deputy Governor or the Governor himself, from supervision of banks to PCAs to February 12th circular, now this. Is this because the communication channels between the RBI and the government are totally jammed, and which is perhaps why, you know, public speeches are being resorted to? You do need to put it out in the public space. And truth be told, just to be the devil's advocate, I'm not a big fan of, you know, watching dirty linen in public, but I remember around the budget 3 years back, and Raghuram Rajan was still in office, when that small change was being made to the RBI Act, it was only because of those public speeches did the narrative get created. So are channels of communication so jammed that one has to resort to public speeches to convey messages?
See, it's a number of things. One, you know, there has been this Financial Reforms Committee process, which has been in process since my time. So that would be like almost a decade ago. And some of those things started getting implemented during the last 5 to 10 years. Now, traditionally, RBI, with some genuine reasons, has been one of the strongest regulators. It has the strongest professional staff, and it has a tradition. But that also meant that it has become, if I may use the word, maybe too strong a word, a little arrogant. So, and I have seen this myself personally in a particular context. But talking about the board has been mentioned. You know, traditionally, everybody on the board and everybody who dealt with RBI was very humble. Now, it's possible that some of the new members are not cowed down by the governor. I mean, I have observed this, that people were very afraid to speak. I am not very aggressive, but I have stated my views quite clearly and strongly. And in one such case, it was a disaster. I was heading a committee. The whole committee was abolished. But anyway, so that is one side of it. But you know, there's another side which I have been emphasizing for the last few days, which is that both the government and the RBI seem to have this thing that we know better. They are not using experts. You know, each of these issues you have outlined and which have arisen between the government and the RBI are very technical issues, I think, as all your participants have said. And for some of these, the traditional method of solving was you appoint a committee which has these specialists, which has the interests of both, and then come to a compromise which is based on sound technical reasons, not compromise based on power. Okay, so this power game, I think, has become larger. That I would say are the two main points to answer your question.
Fair point. And I think a lot of people will also say that the RBI board is not a board of a corporate or of an entity. It's a board of an institution, one that needs to keep an eye on what the RBI is doing, bring in expert views, but confrontation should best be avoided. But quick last questions. I've got the last 3 minutes on the show. Request each one of you to be brief. And Dr. Rajaraman, having sent letters of consultation, having reached to this point where there is so much speculation on is the RBI governor staying, is he going, is Dr. Patel left with a choice but to quit?
I don't believe I don't believe he will quit. I think the very conciliatory message issued by the Ministry of Finance today shows that the government is willing to forget the past and meet and discuss. And I think he will take advantage of that. I'm reasonably hopeful that this storm will blow over. But at the end of the day, we are left with the NBFC liquidity crisis. We are left with the need for small-scale industry to be given credit, and they are starving. They are credit starved. So these are issues which are urgent. They can't be postponed. We really can't wait for committees to issue their verdict on these issues. It has to be solved between the Ministry of Finance and the RBI. And I don't think the governor will quit at this point.
Quit, and hopefully the storm's going to blow away. But Maithili, if the governor were to go, or having seen issues reach to a point where you have the deputy governor come out and make a very confrontational speech, you have the speculation of governor quitting being rife, it does also point a finger in the direction, because unlike the previous governor, this governor and almost all his deputy governors right now are appointed by the government of the day. It does raise questions on interpersonal management skills of the government as well, does it not?
Well, to some extent, whenever there are two individuals involved, as in this case the finance minister and the governor essentially, there's always an issue of personalities. It's important that they get along with each other. But I do hope that they will be able to bury their hatchet and they will move forward, because ultimately they both need to work together. And I think it's very important. The government has shown, been very restrained by and large. It has shown a fair amount of sagacity, and I do hope the RBI will also respond, because as I said, ultimately they need to sit down and talk, and only then will these immediate problems be resolved. We cannot go on deferring again and again.
Okay, two quick last questions. And Dr. Vermani, in some sense, the straw of hope perhaps is it was not Urjit Patel but Viral Acharya who made that speech. So the governor was not in direct confrontation with the government, and so there is this plausible deniability of sorts. Is that a hope at all?
No, I think it's public pressure, and here I think Indira misunderstood me. I think the liquidity issue and the financial system is the RBI's responsibility. I think it's important that markets and everybody put that point onto the RBI. It is not the government's responsibility. It is their responsibility. They better make sure there is no contagion crisis. What I was talking about committees is these individual issues about electricity dues, right, PCA, and other such, the reserve issue, right, and a host of other issues.
No, by that logic, the RBI should be left to do its job alone. I mean, if rupee management is RBI's responsibility, you don't want to see a dual responsibility being also shouldered by the government, and responses and announcements are being made by the government of the day and not the RBI. So people will raise those counter questions as well. But a quick lighter way, it's been a tough day for, I think, all watchers of India's central bank or economic stakeholders. And Jaggi, what is it that can't be solved over a cup of coffee or tea or chas or whatever else the two men drink? Who do you think can broker peace between Mint Street and North Block or New Delhi right now, and how?
Well, the one guy who can't do it is Rahul Gandhi or any Congress spokesman, because the Reserve Bank has been constantly been judged by the political opposition a little too much. So I think who cannot solve the problem is the opposition. If the Reserve Bank ignores that part of the political spectrum, it will actually be able to solve its problems more directly with the government.
Okay, on that note, it's been a fascinating discussion. I've done 3-odd topics and 3-odd shows right now, but I must confess on national television, it's been a pleasure being with this panel. Professor Indira Rajaraman, Dr. Arvind Vermani, R. Jagannathan and Maithili Bhusnurma. Thank you very, very much for joining us on this edition of the India Development Debate. It's a special discussion. RBI is an institution that's globally respected, and there are no two ways about it, no two thoughts on that. The question is, who's responsible for where things are today? RBI, remember, is our best bet against any black swan event, and it is as much the government's responsibility to protect its reputation and its capacity to meet any challenge as it is the central bank. Tensions reach a point but tensions must be diffused, and that is what mature central bankers and mature finance ministers do. We do hope tomorrow is going to be another day, and tomorrow there will be peace.